Good morning, traders. It is Thursday, November 14th. Taking a look at the charts, we got the SP 500 continuing to hold this 5-day moving average. If we zoom in here, the blue line here is the 5-day. It dips below it occasionally, but usually closes above it. And we're really starting to thin out here with these very narrow range days. We keep dipping below it, but recovering. And one of these days here, we're going to crack to the downside. And typically when we crack to the downside, you can see here it cracks the downside, forms some type of smaller bear flag, and can start a new downtrend. And this is usually the early warning sign. It's the shortest moving average that I follow. And today we're seeing equities trade a little bit lower, down just 0.25%. But overall, nothing too significant. Obviously, not even close to yesterday's lows. But the market did have a nice recovery by the end of the session there. Now today, money continues to struggle in the SP 500 and it is flowing back into the safe havens. We're seeing bonds trade higher by 0.5%. Nice pop yesterday, another good pop today in bonds, but at this point we are still in a downtrend, and at this point it is a short covering bounce, meaning it's oversold to the downside, and suddenly once it starts to rally, anyone who's short starts to buy, and it creates a squeeze, and then of course it can go back into a short trend. So at this point it looks like a short covering rally and a pop, but could be the early warning sign that potentially this is the bottom. The bottom's getting put in place for bonds and the safe havens. This is a three-wave correction, an A, B, C, and it's the break of this level here that creates a big washout low. Everyone panics out, and that's what signifies usually a bottom, and we could start to see a base get built here for some type of breakout and run. And we could be looking to get long bonds, because the big picture of bonds here is a series of bull flags where it rallies, consolidates, rallies, consolidates, rallies. This is a bigger consolidation, which means potentially a much bigger rally going forward. Now, if we take a look at the other safe havens, take a look at utilities. Utilities, big knee-jerk reaction there yesterday, big pop and rally. Overall, looks like a short covering rally to some extent. We'll see how things perform today, but overall, it's we talked about this the other day. It's very similar to an unwinding of positions over here, where we see everyone, we just see that no one fearful in the market, and everybody pulls out of the safe haven. And we'll see if it starts to get some traction. But all the safe havens are showing some strength the last couple sessions. Gold up 0.5% today. Let me zoom back in here. Gold's up 0.5%. Silver's up 0.5% if you take a look. Miners this morning are going to be trading slightly higher. Again, miners are actually holding up the best out of all. Simply, we haven't broken these lows. It's still holding above, and we broke this high. So we actually have a higher high, and we at this point we have a higher low. And hopefully the miners will continue to build a base and eventually start to break out to the upside. I think that'll happen with metals in general. It's just a matter of time, and we need to let this cycle kind of work itself out more and start to build another base here. Looking over at the energy sector, natural gas up 3% today. Yesterday had quite the intraday reversal, sold down in a big way and then rallied back up for a really strong session. Today it's flirting with the 5-day moving average, this previous high, this candle wick from over here. So it is at short-term resistance. Again, we'll see how it unfolds here, but we have seen this type of pop before, where we see the market put in a top, it sells down, it has a strong pop, looks really good at one point in the day, and then by the end of the day it closes and it starts a new trend lower. And that's typically more or less where we are right now. If you look at this price action where the market rallied up, we had a little pullback, and then price gapped and ran to new highs. We saw the same thing. It rallied up, pulled back, gapped to new highs, and then we've seen a sharp unwinding, and now we've got this knee-jerk reaction pop here, which you could argue there's potentially a mini head and shoulders. You got a shoulder, you got a head, you got a shoulder. It's at the 5-day moving average. If it starts to break this level, we could easily see natural gas unwind very quickly and come back down to the upper end of this range here around this 240 area. This could be a fairly significant support zone that if this little head and shoulder breaks, it could continue to move lower. Looking over at crude, all over the place again. Yesterday down and then up, and today it is pushing and really testing these upper limits here. The trend is still to the upside. It is very mixed. Overall, if we were to just draw some channels on here, you can see where crude is channeling, it's ping-ponging around. Again, this big bias to the downside. I feel as though this is more of a bear flag forming. In the short term here, we have a small bull flag forming, and I think we could see this pop continue to push up to this 58, 59 area. Maybe it'll have some type of short squeeze and reversal bar up to that 60 area and give us some type of signal to potentially play a downside move to 51. And if 51 is broken, the next critical level in the sand, there's quite a bit of downside potential here. If this support level is broken, we could see this 51. If 51 is broken, this is where we could start to see a really sharp collapse down to test these lows over here around 45, potentially down to 42. And the way Fibonacci works is the market is always seeking a new higher, new low. So the fact that it could come down, test this low, Fibonacci is going to say, okay, well, let's break that low and create a new low. So there's potential all the way down. We've posted an article talking about it down to the $40 per level in crude potentially. Now we need to wait. The trend is still up. We need to start to see this break down. Could be a great inverse play to the downside going forward. Anyways, that's it for this morning. And let's just take a quick look over at the VIX. The VIX is starting to look primed and ready for a pop. You can see the last time we've seen the VIX down at this level here, this blue line, this 12 level. Whenever it gets down here, we've seen the VIX really explode in value, and we're back down to this level again. It's taking its time here trying to etch out a bottom, and I talked about the VIX ETF, how it loses value, or not the ETF, the futures every month, and the futures expires on the 20th, so we've got a couple sessions left where the VIX futures should lose some value, and hopefully the TVIX ETF, the way they're built, will start to lose a little bit of value, but we might be looking to get long with just a small position, probably 10 or 15% of our portfolio. Holding the VIX here, it'll be there's potential for a pretty significant run. If we look at the TVIX ETF here, and we just zoom into the price action, you can see the size of the runs we've had before, where we've gone from 18 all the way up to about 30 from this other level here. Now the TVIX, the way it's built, is always going to be trending lower. That's why it's a little more difficult to time it. You really got to get in, you play the bounce, and then you got to get out right away and potentially even short it for the fade back down. But overall, we've seen a move from 11 or 12 up to 20. So we're looking at like 20, 40, 60% moves, fairly common when we get into this. And the question is this finish drifting down, or is it going to be an extended double move where we see the second half of the move really lose value? But overall, the market feels primed and ready for another bounce. We're at 8. We could, I think, easily pop back up into this 12, 14, maybe even 16 level for TVIX going forward for a very quick 50 or 100% return on the play. But keep in mind, this does lose value every day, pretty much the way that it's built. So the timing needs to be dead on, or you need a really strong pop to recover. And that's why positions need to be relatively small for this type of play. But keep in mind, we might get long the VIX today or potentially tomorrow as the market unfolds. Anyways, that's it for this morning, and I'll talk to you in a little bit. Take care. Bye-bye.